It's that people say their spending is going down on everything but on their pets. Is that right?
That's right. Yeah, really, the family pet is the winner this holiday season. Our survey showed that consumers plan to spend less on most categories over the holidays, except for one, which was pet toys and accessories. So, even though people aren't taking their kids to Disney World, the pet is really getting the bulk of that spending back.
Yeah, and we've seen that with the performance of these names this year with I think it's PetSmart or I think Petco is now coming back to market for the third time. But you make an important distinction, which is there's a difference between what people say they're going to do on their spending and what they're actually doing. What have you found on the latter?
That's right. I mean, I think it is really important to differentiate between what our survey respondents said they plan to spend on and then what we've actually seen in the data itself. So our Bank of America credit card data continues to show very high levels of spending in categories like consumer electronics, home decor, and these were both categories that our survey had showed people plan to spend less on. So we're not seeing that happening in the actual spending.
Yeah, and that's actually held up relatively well. Let's talk about a couple of the stocks that you cover, Home Depot and Lowe's. There's some findings in here that are relevant for them, specifically on the home buying and the work from home side. Tell us about that.
Yeah, so our survey showed once again, and this is the third time we've run it. So we initially ran the survey in June, which is really like in the midst of COVID, and then we ran it again in September and now in early December. And what we've seen is that an increasing percentage of people plan to move to less population dense areas. So even though there's this positive vaccine news that's come out, the intention to move is still really strong. And so that's very favorable for home improvement retailers like Home Depot, Lowe's, Floor and Decor, where housing turnover is an important driver for renovation demand. And
so would you say the kind of takeaways from the investor are there can still be legs for Home Depot and Lowe's? A lot of people are worried about, even Stan Druckenmiller mentioned, are they going to have a hangover as people kind of go back to normal? And this has pulled forward a lot of demand. So Home Depot, Lowe's, maybe even a Tractor Supply. I mean, where are the names that these results leave you the most positive on?
Exactly. Yeah, we think that there are some COVID beneficiaries that continue to grow into 2021 and beyond, and especially those that have really sealed their dominant market share and are taking market share from smaller retailers in the category. So like you mentioned, Home Depot, Lowe's, Tractor Supply, these companies have now very, very strong cash balances. One of the things we saw from Lowe's today at their analyst day was that their outlook for next year, even in a worst case scenario, they still have their operating margin up and they plan to do $9 billion in share buybacks. So these companies have large cash hoards that they can then deploy towards growing shareholder value and also towards investments in deepening their competitive moat for the future. So, we really like those large, well-capitalized retailers that are dominant in their sectors.
Shepard Smith here. Thanks for watching CNBC on YouTube.